Thanks, Harry, and thanks again to everyone dialing into the call. Just to give you an update for the quarter. Firstly, in terms of the markets, it was a very strong performance in the first quarter. Egypt was up strongly 14%, Nigeria up 8.5%, Kenya up 5.9%, just with a bit of a drag from Botswana and particularly Zimbabwe. I think one of the things in a US dollar term to highlight is that for the most part there were actually some currency gains. So the bulk of the local currencies were actually slightly stronger versus the dollar, which I think is given the past couple of years is a very positive move. Just moving on to developments in the main markets that the funds have exposure to. Broadly speaking, the macro developments are very positive, with our key markets reducing inflation, increasing growth, and rapidly accumulating FX reserves, which I think bodes well for currency. And again, the fact that we are US dollar funds. Just moving on to Nigeria, developments continued their positive trajectory in the first quarter. March PMI reading was 56.7. FX reserves continue their steady march upwards at $47 billion month to date in April. Inflation came down to 13.3% from 15.1% in January. And I think last but not least, a higher oil price. And that just leads me to the subject of the oil price. What I think isn't fully appreciated is the substantial increase in the oil price when denominated in Nigerian naira. In 2013, the naira oil price was 15,000 naira per barrel. It had dropped as low as 6,000 per barrel, and is now a reasonably handsome, or I could even say a whopping 27,000 naira per barrel. The reason this is important because it gives the government more money to settle its local obligations. In the last year, the government has been able to increase the federal allocation that it distributes from the federal government to the different tiers of government. It's increased it from 450 billion naira in February 2017 to 650 billion naira in February 2018. We feel this will be transmitted to the consumer, and the increased disposable income and increased corporate confidence will drive the economy going forward. We play this theme through the Nigerian consumer companies as well as the Nigerian banks. Our two holdings in the bank space, Guarantee Trust Bank and Stanbic, which despite a very difficult 2017 delivered 34% and 31% ROEs respectively. Their Q1 results were also both very strong, with Stanbic delivering Q1 2018 earnings of up 44%. On the consumer side, Nestle and Unilever both delivered strong results for 2017, and in the first quarter so far for Unilever, revenues are up 16% and earnings are up 32%, which I think is pretty impressive. Moving on to Egypt, the country held presidential elections with the incumbent Sisi winning comfortably at a 97% margin. It was a kind of a non-event for the markets, but nevertheless very positive. The central bank cut rates by 100 bips to 16.75, which is its second cut for the year. Inflation came in at 13.3%, which is down 17.1% in January. FX reserves were 46 billion, substantially up from this time last year. Then onto some of the sort of other sort of economic indicators. The resumption of flights from Russia means that the already strong tourism numbers should further improve. The PMI of 49.2 is still below 50, but it has improved, and I think really just tells us that we are still in the early stages of recovery. Our key pick in Egypt is Commercial International Bank, which we believe will tap into this recovery, will tap into this growth, and it delivered very good results in 2007 and 2017. In Kenya, I think after what was a very difficult and well-documented post-election period, Kenya seems to finally been turning the page, with the two rivals, Kenyatta and Odinga, agreeing to start a reconciliation process. In terms of the controversial interest rate cap, the President, the IMF and the Central Bank have all put their cards firmly on the table, and that's for a repeal of that law. There is some resistance coming from MPs, which we believe will slow the process, but we ultimately believe that some modification of this rate cap law is inevitable. This will be very positive for the economy and particularly banks. Our key pick in Kenya is Equity Bank, which we just want to stress did exceptionally well in 2017, despite the rate cap. We continue to believe that its mobile money strategy and fees model will drive its business. A rate cap repeal will simply be a bonus on the top for the stock. I think it's also, just going to macro, I think it's also worth noting that FX reserves now stand at 9 billion, which is an all-time high for the country. In terms of one of our other large exposure, Zimbabwe. We visited Zimbabwe this month, post some of the 2017 results. Management teams are cautiously optimistic in their guidance, and an improvement in economic prospects depends on free and fair elections. The positive headlines keep coming in with pledges from the private sector to invest, but all contingent on credible, free and fair elections. On the ground, the queues by the ATMs remain, but both the formal and informal sector continues to embrace electronic payment channels. Electronic transactions in the country doubled from 2016 to 2017 to a total of 1 billion transactions. The main platform for these payments by volume is mobile money, which now accounts for 750 million transactions, which is 74.5% of all transactions. In terms of companies there and exposures, both in the Opportunities Fund and in the Zimbabwe Fund, Delta, the beverage and brewing company, is our top pick there, and the Q4 results just came out, which were very strong. They didn't give earnings, but revenues were up 52%, which is an excellent performance. Our other key pick there is Econet, the number one mobile money provider and the number one cell phone operator. They produce They come out with results in mid-May, and we expect those results to be very strong. So that's the end of the markets and the kind of the macroeconomic update. We did send out the fact sheets. All the details are on those. We have started sending out quarterly commentary. Instead of the kind of usual. Sending out monthly commentary instead of the usual quarterly commentary which we have been sending out. So if I can turn it back to Harry, or perhaps just straight to the floor for Q&A.